Good morning and welcome to the Morning Bell. I'm Robert, joined by Lizzie and Steve. It's Monday, April 6th, 2026, and we have a lot to cover today. Lizzie, what are the main themes you're seeing in today's news?
Thanks, Robert. Well, the dominant story right now is the ongoing oil crisis and its ripple effects across global markets. We're seeing significant volatility in energy markets as OPEC has committed to boosting output once the Strait of Hormuz reopens. But there's considerable uncertainty about timing. What's particularly notable is how this oil shock is different from previous ones. The Financial Times is highlighting that this crisis is hitting Asia first, which foreshadows some tough times ahead for Europe. Oil prices have been swinging wildly on reports of a possible Iran ceasefire, and Trump has issued an ultimatum to Iran to open the Strait of Hormuz by Tuesday or face serious consequences. This geopolitical tension is keeping investors on edge. Beyond energy, we're also seeing interesting developments in the media sector, with Paramount securing $24 billion from Gulf funds for a Warner deal, which shows that despite market uncertainty, major M&A activity is continuing. There's also growing attention on distressed opportunities, particularly in Argentina, where ex-Wall Street traders are attempting turnarounds under Milei's administration.
That's a significant amount of uncertainty to navigate. What does this mean for traders and investors right now?
The key takeaway for traders is that we're in a period where defensive positioning makes sense, but you don't want to abandon quality growth entirely. The Wall Street Journal is pointing out that one of the stock market's last havens is now at risk, which suggests that even traditionally safe sectors are facing pressure. For practical positioning, I'd say investors should be looking at diversification beyond traditional portfolios. There's actually a Market Watch piece highlighting the importance of retirement planning beyond just 401ks, which resonates with the current environment. In terms of sectors, boring stocks are actually still beating the herd according to the Financial Times, which tells you that stability and cash flow are being rewarded right now. On the fixed income side, there's an interesting Wall Street Journal piece cautioning against tossing out junk bonds along with private credit debt, suggesting there may be value in high yield if you're selective. The tech sector remains vulnerable, and Goldman Sachs just upgraded Netflix to buy, citing more positive risk-reward from current levels, which indicates that even within tech, there are opportunities if you're careful about valuations. The main thing is to stay nimble and watch how this Iran situation develops over the next 48 hours, because that's going to set the tone for energy prices and broader market sentiment.
That selectivity is going to be key. Steve, let's get into the economic numbers. What's the picture looking like?
Thanks, Robert. So today, on Monday, April 6th, we don't have any major economic indicators scheduled for release, which gives markets a bit of breathing room to digest last week's data and focus on the geopolitical developments. Lizzie mentioned, however, we have a very busy rest of the week ahead with several high-impact releases. Tomorrow, Tuesday, April 7th, we're getting durable goods orders with a forecast of 0.5%. This will be an important read on manufacturing demand and capital investment trends. Then Thursday, April 9th is really packed with significant data. We'll see the GDP report with a forecast of 0.7% down from the previous reading of 4.4%, which would represent a substantial slowdown in economic growth. Also on Wednesday, we're expecting the PCE price index, which is the Fed's preferred inflation measure, with a forecast of 0.4% matching the previous reading of 0.4%. This will be closely watched for any signs of inflation reaccelerating. We'll also get initial jobless claims on Wednesday with a forecast of 209K compared to the previous 202K, so a slight uptick in claims there. Moving to Friday, April 10th, we have several important releases, including the Consumer Price Index forecast at 330.43, up from the previous 326.79. We'll also see the Consumer Confidence Index with a forecast of 52, down from the previous 53.3, and the University of Michigan Consumer Sentiment also forecast at 52 versus the previous 53.3. Finally, factory orders are due Thursday as well, with the previous reading at 0.1%. So the back half of this week is absolutely loaded with data that will give us a comprehensive view of inflation trends, economic growth, and consumer health.
That's definitely a data-heavy week ahead. Lizzie, let's shift to crypto. What are you seeing in the digital asset space?
The crypto market is showing some interesting dynamics right now. Robert, Bitcoin is in a cautiously bearish phase, trading around the $69,000 level after reclaiming it on ceasefire talk and a short squeeze. The key level everyone's watching is $72,000 because there's about $2.5 billion in short positions that would face liquidation at that price, which could trigger a significant move higher if we break through. However, analysts are warning that unless Bitcoin can reclaim $75,000, there's still risk of a meltdown scenario. Bearish social sentiment has actually hit a 5-week high according to Sentiment, which is notable. On the institutional side, things remain constructive. Charles Schwab just announced they're planning to offer direct Bitcoin and Ethereum trading in the first half of 2026, with a waitlist already open targeting a Q2 limited launch. This is significant because it brings crypto access to millions of traditional investors. There's also interesting discussion about Bitcoin's relationship with the US dollar, with a BPI executive describing it as symbiotic rather than competitive. Robert Kiyosaki continues to recommend Bitcoin alongside gold as we see a full circle moment from 1974 economic shifts. Ethereum is looking more bullish relatively speaking. The Ethereum Foundation has nearly reached its 70,000 staked ETH goal, having doubled their staked position and clearing 2/3 of the target. ETH is trading around $2050, and the staking progress could provide support for a breakout above that level. Solana is more neutral, with some concerns emerging about quantum threat readiness and the trade-off between security and speed, though the network continues to show resilience. The overarching theme is that institutional adoption continues to build with products like Schwab's offering, but retail sentiment remains cautious, and we need to see Bitcoin reclaim key technical levels to shift the momentum more decisively bullish.
Well, that wraps up today's Morning Bell. We've covered the oil market volatility and geopolitical tensions, a data-heavy week ahead with GDP, inflation reports, and consumer sentiment readings, and the mixed picture in crypto, with institutional adoption advancing while price action remains range-bound. Remember, do your own research and consult with financial advisors before making investment decisions. If you found today's discussion valuable, please subscribe to the Morning Bell so you don't miss our daily market insights. I'm Robert, along with Lizzie and Steve, and we'll see you tomorrow.